Hi, I'm Justin Reid, CEO of Troilus Gold. We are a developing gold and copper producer in Northern Quebec. Strong balance sheet, large resource, 8.1 million ounces equivalent and growing, 5 drills turning, targeting new resource, pre-feasibility mid-year, and eventual construction of one of the largest gold producers in Quebec.
Justin, good to see you again, sir. We wanted to catch up with you. Lots of drill results out that we want to get into with you. But what we've noticed is this slight change of emphasis from pure gold story with a little bit of copper to perhaps a little bit heavier weighting on the copper. Why is that?
Commodity price, probably. I think focus from a market standpoint and a demand standpoint for copper, and the economic input that the commodity will have on the eventual project. We're going to produce between 7,000 and 10,000 tons of copper a year. That's not a huge number, but it is the largest copper producer, or will be the largest copper producer in Quebec, and the largest between Sudbury and Voisey's Bay. So $3 copper in our PA gave you about $100 million in NAV. $4.50 copper where we are today increases that by about another 150 million US. So it's significant from an economic standpoint, and then from a financing standpoint, which ultimately is an incredibly important discussion point now in the market as you're a developer and building. It provides us a ton of optionality, and so copper's in high demand, and we're getting approached about it a lot.
Right. What's it do for the shareholders? You're saying that it's not a segue. We're not changing direction. This is a reaction to market conditions for copper because it helps us with maybe better access to financing. I mean, you were already covered in that department. So what else does it bring to shareholders?
Well, we're really not changing direction at all. We're just talking about it a little bit more, right? This is going to be a 200 to 250,000 ounce producer plus for 20 plus years. The copper is just more relevant today because the Quebec government is focusing on it. The Canadian government is focusing on it, and global inventories are quite low. However, at $3 copper, 15% of our revenue was going to be copper based. At $4.50 copper, it's more like 20% of our revenue is going to be copper based. I want to keep our gold and our precious metals unencumbered. We are a gold producer. We want to keep that leverage clear for our shareholders. Copper provides the opportunity for non-dilutive financing, if you think of it that way. You can sell it forward. There's a number of derivative instruments you can use for the copper. You can stream it. There's 100 different things that you can do with copper that ultimately provides further de-risking that your project's going to get built. Economically, it makes it a great deposit, helps make it a better deposit. And from a capital standpoint, it provides me with optionality for financing. And it's all about financing now when you look at CapEx is above $300 million.
But last time we spoke, we talked about the finances and the Quebec government's intent to help companies like yourself. So that for me, I kind of written that down and said, well, okay, that's fine. That's already covered here. So is it worth the risk? Trying to maybe increase the variables on the table, slightly change the narrative for the market, or do you think that's what it's going to take? And the reason I ask that is because copper equities have not followed copper price. And the precious metal market last year was tough for everyone, right? So is this just switching things up just for the sake of it? Or do you believe that as a future producer, this is the right thing to do now?
I think it's important that we start looking at that optionality now, right? Our financiers are still in place. Quebec government is still in line with us. They're great partners. They're great shareholders. That's not going away. I think this gives them even more confidence. At the end of the day, they have to have a return too, right? And so the Quebec government and the Canadian government named copper a strategic and focused metal. If it's named a strategic metal, that means that their balance sheet is going to be directed more towards that exposure because they've been mandated to. We're going to be the largest copper producer in Quebec. So as such, we should talk about it.
Okay, well, talking balance sheets, you've got quite a bit of cash. Let's just remind people what you're going to be doing with that. Where are we at? So $40 million or so. Drilling, obviously, order of the day, but can you kind of run through the priority of spend?
Yeah, it's, I mean, this is the year. This is the year for Troilus, and everybody's coming out in January saying this is the year for us, but it is. I mean, cash is strong, circa $40 million, 5 drills turning right now. We are racing to a very fast 30,000 meters. With 5 drills, I'm talking 12 to 15,000 meters for a month for the first 2 months, and then it'll tail off. The press release that we put out yesterday shows more great results, the extension of the Southwest. All 5 drills are sitting right there. The footprint of Southwest is now 1.85 kilometers. To put that in perspective, that's a larger strike length than 87 in J zone, where 2 million ounces of gold and 70,000 tons of copper was historically produced. So that 30,000 meters is about chasing those grades we released right to surface where we can see them, filling it in for reserve, and getting it into the pre-feasibility. So lots of drill results. Met work is almost complete. We'll get that to the market very shortly. I'm not concerned about it because we had 14 years of data that shows us good met recoveries, but brand new met work. New resource. We haven't put out a resource in over a year and a half, and we've completed almost 150,000 meters of drilling since our last 8.1, and pre-feasibility before the middle of the year. That's fast.
It is fast, but you're already big, right? You're already big. You're going to get to a scale where it's going to be too big for others. I know you're putting a team in who are builders, right? They're miners. You're very firm on that with me last time. You're putting people who actually build a mine. That's all good stuff. You don't need to do much more drilling. You're doing infill. You're going to get this resource, possibly reserve out. Again, for investors, to what end?
Yeah, so we need reserve, pre-feasibility. You can have all the inferred in the world. That's great. We're seeing great conversion of inferred to reserve. This is about infilling to a level of confidence that the market needs or our financiers need, and for 43-101. The also very important thing is that the grade profile, we put out 14 meters at 2 grams, and within that 5 of 4.5. And there's a bunch, read the press release, there's a whole bunch of great intersections in the south there. The grade's creeping up. And a low grade bulk tonnage deposit, if we can identify in the Southwest 20 or 30% higher grade for the first 4 to 6 years, the impact of the economics is unbelievable. And I think we are getting to that point now where by raising the cutoff grade from 0.3 to 0.5, we have the potential of running higher grade through the mill early in the mine life, expedites your payback, increases your IRR, and provides a far better project. And so that's what we're working on. The Southwest is giving that to us right now. Right.
And so that's quite an important point, actually, because we did talk about it last time, but I saw some questions sent in which suggest people didn't catch that necessarily, which is that's the reason the resource component has been delayed. You're seeing higher grade and you're doing this infill program. So it's worth the wait for you, certainly in terms of the economics to justify a delay. Right. Okay.
100%. I mean, we started the company in 2018. We've identified a new 6.5 million ounces in the last 3 years. Pre-feasibility is on the doorstep. That's fast. That's really fast. And so we don't want to make a mistake. And there's a huge opportunity right in front of us, and we have to finish it. So.
Right. Okay. You talked about the met work coming out. You'll let us know what that looks like shortly, imminently. Q1, presumably. Is that right? Did you say?
Yep.
Okay. Fantastic. Resource and reserve. When would we see that now? First half.
You'll see that fairly close to the pre-feasibility. So both of them will be coming in just before mid-year.
Mid-year. Okay. First half. Fantastic. Obviously, you've gone and recruited a bunch of people who aren't here for exploration, because this is big enough. It's big enough for them to say, actually, I think this is going to be a mine. What are they doing? What have they been doing in the background?
Yeah, we had a very busy. We kept it quiet, but we've had a very busy summer away from the mine, because the mine's really engineering focus now. We've had 5 teams, almost 40 plus people in our 1,400 square kilometers, taking our new model from the mine and applying it to the belt. Tons of geophysics, 8 or 10,000 rock samples and soil samples, some drilling, and we'll be presenting our whole regional program to the market. But what we've been saying all along, and I think the work over the last 2 summers regionally has shown, is that Troilus isn't a mine, Troilus is a belt, and that this belt has been underexplored or not explored for 50 years, and certainly hasn't been explored the way we explore with modern techniques, and that I think there's going to be a lot more Troiluses sitting there.
Okay. Tell me how you come at that, because I'm always coming at it from the investor's point of view when I can sort of expect to see some uplift, some value creation, right? So if not a mine, it's a belt. There'll be a bunch of Troiluses in here. What's the work that's being done now? Because I asked you about, what's the mining team doing, the team who will build a mine doing, and you're talking about regional exploration because it's a belt. Okay, so I get you want to push that, but the market is not rewarding people who are taking a long time to get into production, right? It's like if the story runs for, I know it's 2018 for you, but it's got a history before this. So people want to see some action here. So what's the team doing in terms of moving this forward on that front?
On the mining front, all focus. We've already had our first permitting consultations. So on the environmental side, pre-consultations are underway. The environmental team is completing the EIA. Provincial permitting is underway. And so there is a whole environmental permitting team that is working towards delivering the permits required to build this mine. And you never spend enough time talking about permitting. It's just, oh yeah, every CEO will say it's coming. Don't worry, it's taken care of. But we have 2 processes, provincial and federal. Jacqueline Leroux and her entire team are running this. Jacqueline is one of the best environmental engineers I've ever worked with, and she has an incredibly good handle on it. We had a huge turnout for our first consultations 2 days ago, and it's great. We're seeing lots of support, but it's step 1 of 5 in permitting underway. Engineering, you have geotech done. You have tailing studies with Golder underway. You have Lycopodium running in our process plant. You have G Mining working as a peer review to everything that we're doing. We have between 6 and 7 different external consultants working with Richard Harrison, Ian Pritchard, and our entire engineering team, delivering the absolute best PFS. And then Blake Highlands and the mine exploration team is throwing this resource in, and all the engineers are kind of waiting for this last 30,000 meters of drilling. So everybody at the shop is full steam ahead.
Okay, that's good. And again, in terms of we hear what you're doing Q1 and obviously the PEA some point mid-year, maybe first half.
Yeah, PFM.
Right. How fast does it move after that point? Because, like I said, if you kind of, you just said to me, it's kind of, we have not talked about this before. There are multiple Troiluses out there. That's great news for the future, and maybe people start factoring in some of that upside now. But what they need to see is, can we do the first one, please? Right. So, what's the timeline as you see it for getting to production?
And whatever I tell is wrong. And everybody understands that. But pre-feasibility by mid-year. What I'm really pleased about in the pre-feasibility is that the geotech work, the tailings work, and the processing work is all going to be done to an incredibly high standard, very close to full pre-feasibility scale. So I think we're going to be able to expedite the feasibility targeting year end or early Q1 of next year. So think of a 6-month gap between pre-feasibility to feasibility. Pre-feasibility is important. Final project description goes in because of that. You start your IBA, impact benefit agreements with the First Nations at that point. It's a very important flagpole. And then we're not worried about provincial permitting. Remember, we have a permitted site. We need to amend it. We have a permitted tailing, so we need to amend it. So it's brownfields, disturbed, well known. Federal, so we believe we can permit provincially in 12 to 18 months. Federal, as everybody who's spoken to you in Canada is the wild card now. Federal permitting can take anywhere from 12 to 18 months to 5 years. And that 5 years is a very daunting number, and I don't want people to get worried about that, because that's the maximum each of the 5 steps could take. The government gives you windows. We have a huge lobby with the Quebec government and the First Nations. We have an active mining history. We have a disturbed site, and we have a number of measures to mitigate timelines. So we believe that 18 months, we can have the whole thing permitted, really in a position to break ground in 2024.
I can understand that. Okay. Which is fine, right? Absolutely fine. No problem with that. Just trying to understand how you're coming at it. I need to ask you something. Because there was some concern in the market. I need to know if I should be concerned. You got some insiders. I think we're talking about, was it 2 million options being bought and sold? What do you guys know that we need to be aware of?
No, they weren't sold. It was shareholder approved standard compensation plan that was put in place by KPMG. Shareholders approved it. We have no options in Troilus. We have an RSU plan, just like all the major companies and advanced developers. And January is when they vest. And it's counted as income and it's taxable. And so all of those who were, and that majority, we have a big team, the majority of those who were issued RSUs had to pay tax. So you either wrote a check or you had the choice of selling some stock. And there was a small amount sold, but for the most part, pretty pleased to see that the majority wrote checks to get all their stock. And so it's standard. Majority of companies do it, and it's considered best practices right now. So. And the quantum is below the 50th percentile of our peer group. So no problems there.
Okay, so standard issue across the board, but I think it just needs you to say it out loud and for people to get comfortable. So I think that was worth asking. Can I just talk to you about the market though? Okay, you're an ex-markets guy, right? You got a view on these things. We saw precious metals across the equities, across the board, under a lot of pressure. Gold price, silver price, pretty darn good actually if you're a producer. Lots of money being generated and probably lots of M&A coming down the line. How do you think you did in relation to your peers? Or do you think it was pretty?
Well, it's two questions. How do I think we did? I think we did poorly, and because our share price is down, right? I'm a huge shareholder. My value in Troilus went down. And ultimately, that's what I care about. I'm benchmarked against the GDXJ. I'm benchmarked by my board against my peer group. But ultimately, my job is for our stock to go up, and it will. We underperformed the GDXJ. The majority of the developers did. Remember, the market cap average for the GDXJ is close to $1 billion. So we underperformed the GDXJ by about 5 to 10%, I think. And our peer group, which is a number of other developers that you have on, we were in line or outperformed them by kind of 10%-ish. So we're caught up in the wave. I think it's that there was a perception or is a perception that, you don't necessarily have to own the developers today. You can come in. There's a lot of de-risking to do. There's going to be a lot of capital to raise. And, we can go look at some of these producers who are trading at pretty low multiples. And they were. Exciting to see that the producers are making incredibly good cash right now. Balance sheets are getting really strong. Debt's getting paid off. Dividends are going up. And then if you look at the last 6 months of last year, we've never seen so much gold M&A. Agnico, Kirkland Lake, there were 12 or 15 transactions. Great for the bankers. So all of those are cleaning themselves up right now, I think. But certainly, I think we're in a great spot. What I say to my team is heads down, cash is great. The risk of dilution to our shareholders in the near term or midterm is zero. And we have a great project with a ton of catalysts to deliver. The capital will flow back to the developers. We will see, obviously I'm a gold bull. I really believe in the inflation hedge trade. The market is fighting it as much as they can, but it's going to break. The equities are weak, but gold's at 1850. Gold was at 18 plus or minus for the entire half of last year. That's the strongest gold price we've seen in almost ever. So for a length of time, so you're going to see growth. You're going to see growth, and I think money's going to flow back. And everything I'm reading is that the gold on trade is now, especially with, you look at it in the S&P, look at the big off trade of huge tech right now, the massive retreat of tech, especially in New York and globally, switch back to hard assets where they're looking copper, nickel, gold.
I'd agree with that summary of the market at the moment. But here's a question that leads on from that.
But I'm talking my own book.
Well, no, you are, and gold bulls always do, and always will, I suspect. But you're not a kind of gold 5,000 guy. You're more realistic than that. Here's the question for you. You've got a big resource and you're going to update it soon. It's going to be a big number. We've seen these big deals. You mentioned and referenced some of them, earlier. There is a lot of cash around. There's some of the big guys are looking to kind of fill up their resource and reserve numbers. Do you think you're defensible? Would you be upset if someone came along? Because you're over scale, right? You're one of those guys.
Yeah, I mean, it's a
funny problem, right? It's a funny problem to have.
Well, it's a terrible problem actually, if you think about it, because it's I work for the shareholders. My board works for the shareholders. If somebody came in, and this is completely hypothetical, and offered 100% premium for Troilus, right? So $1.50 a share, I failed. In my mind, I have failed. If I don't take $1.50 a share to my shareholders, I go to jail. You know what I mean? And so there is this relative value argument where, hey, $1.50 a share, congratulations, you're a $350 million company. Yeah, but we're building $1 billion asset and we haven't even got a chance to deliver it yet. And so, but that is the nature of the beast. And this is a long game. And building a mine is hard. And there's a number of, you can't rush it. You can't make a mistake on your steps, because if you make a mistake here, you got to go back to the beginning. So it's just methodical de-risking, and value will be recognized. I look at some great assets out there. I look at Eagle at Victoria Gold. Victoria Gold was a $50 million company forever. Nobody believed they could do it. Nobody believed John could do it. John did it. He financed it. He's $1 billion company. He's now got a target of 250,000 ounces a year. And it was hard work. You look at Detour, you look at a Cisco, it was hard work. The market wanted to forget them until they got into production. So yeah, we need to deliver these major catalysts in the first half of this year. Because I think those are going to be major de-risking events for us that hopefully start that train of appreciation.
Yeah, and that is really important for you. And the only reason I ask this is because I've seen different types of buying this year. We saw Great Bear, no resource, just drill, and there you go. Kinross waltz in and pay a big chunk of change for that, and whereas Barrick perhaps valued it slightly differently. You've got other types of buying elsewhere in the world. It makes me realize that you've either got to say, I need to show the shareholders why we can be $1 billion company, and you're going to need to do it quick. Because I agree with you. I think if you sell out at $1.50 at the moment, you'd be like, well, that's kind of where I was in the middle of last year, beginning of last year, before the market came off. That would not be a win for you or the rest of the board, I suspect. But you need the support of the shareholders and their belief in your ability. So you think these catalysts this year will give you that defense or defendability, i.e. the support of retail?
Yeah, I think so. I mean, the market hears from me. They need to hear from other people on my team as well. They need to hear from our geological team and Blake Highlands, who are adding the ounces. We need to hear from Richard Harrison, who's building this mine, right? Hey, Richard, why did you leave Malartic building the $1.7 billion Odyssey project? It was his project to come to Troilus, right? And obviously the answer is I'm going to pay him well and give him lots of stock, but it's a great asset and it's going to be a great mine. So yeah, everybody hears from me. I think it would be great for them to hear from other people at Troilus too. We're
going to make that happen. We're going to set up two more interviews so that we can do it. One with your geo team, and obviously second one to hear about how this thing gets built out. So, Justin, appreciate your time today. Great update from you, and look forward as to what you're going to be up to. But I think I'm going to take you up perhaps on the offer of speaking to a few other people in the team to really sort of see the depth of the team. So appreciate your time today. Thanks very much.
Thank you.